Getting some ISMs and jolts right now. Let's get back to Rick Santelli. Hey, Rick.
Yes, let's start out with jolts, shall we? Expecting a number for our Feb read around 7,600,000. Comes in just a smidge lower, 7,568,000. 7,568,000. How does that comp? Well, that would be the lowest rate on a month-over-month basis going back to, well, the end of last year when it was 7,508,000. So we see it's coming down, but we are really starting to consolidate now. That's 3 months in a row. We're right around 7.5 million. Let's look at construction spending for February. Expecting up 0.3, Carl. It's double plus, up 0.7, almost 0.75%. That would be the strongest rate going back to October of last year. And last month, here's the problem, -0.2 moves to -0.5% in the January read. Now let's look at ISM manufacturing, the PMIs, the headline number, 49.0, 49.0, a little bit lower than expectations, and it puts us back in contraction territory, which means we're going back to the end of last year, where we basically had all 12 months under 50, and January, February of this month were above 50, and of course this is a March reading. If we look at prices paid, we'd prefer they go down, but that's not the case. 64 plus expected, 69.4, 69.4. That would be the highest rate. We have to really go back on this. That'll be the highest rate going to, well, June of 22. June of 22. If we look at 45.2, that's new orders. That's definitely about 3 points light and sequentially lower. 45.2 would be the weakest rate since May of 23. And finally, if we look at the employment side, employment at 44.7, an important week. Of course, we're going to have Wednesday and Friday employment reports. 44.7 is about 3 points less than expectations, and that would be the weakest level going back to, well, mid last year. And here's something we want to pay attention to. Every single number here, but prices paid, is sequentially lower. And it's unfortunate because prices paid is the one you really want to be sequentially lower. Yields, as Sarah pointed out, continue to move lower. 415 in a 10-year would be down 6 basis points on the day. We're looking at the very minimum, if it closed here, a 1-month low yield close. The short end, not as aggressive as it was yesterday. 2 years yesterday closed at the lowest level since early October of 24. Sarah, back to you.
Not great, Rick. Not a great mix of data there that you just reported. Thank you very much, Rick Santelli. A little stag, a little inflation there.